The latest CoreLogic report paints a bleak picture of Brisbane's property market.
Prices are up 15% when compared to last year.
Brisbane's property market is finishing the year strong.
Greater Brisbane's housing market is quickly picking up market pressure, but how quick? And what secret weapons is Brisbane hiding that are actually major catalysts for the future performance of its housing market? In this episode, I'll also run through 10 key property metric charts that will guide us both through this data deep dive analysis together. And at the end, I'll give you my prediction of where it's going to be in 2024 and 2025. Brisbane's trends are really starting to come back, and we call Brisbane a second wind market. Now, more on the second wind market and what it means, but let's analyze firstly chart 1, which is around the core market performance metrics of Brisbane. So we're starting to see our price pressure. So this is the actual price growth in terms of short-term metrics starting to improve here. And we're really stretching out to a pretty solid market, almost at the highest price pressure you can get. So that's pretty good. Rental market, like many parts of the country, is booming in Brisbane and moving extremely strong. And then when it comes to rental yields, they're not the strongest. I think other capitals like the Perths and parts of Adelaide's and even the major regionals offer better rental yields. But expect Brisbane rental yields to grow, especially as the rental pressure has not come off. It's really been strong in many areas. Now, Brisbane's not one of those markets where it's like unaffordable. And when I say unaffordable, it's just based on repayments and interest rates and so forth to some of the major cities like Sydney, Melbourne, but it's also not super affordable, say like parts of Perth and Adelaide. Incoming supply, there's not a whole lot of supply. It's not completely undersupplied, but it's not oversupplied by any means. It's starting to be in that undersupply for build approval pipeline. And from the growth cycle, it's still looking pretty strong. I know it's had a lot of growth, but this is where I mentioned that second wind aspect. What tends to happen in markets is you've got 3 core market cycles. The first is called an early adopter cycle. This is where trends are starting to shape and we start to see that bell-shaped curve start to emerge. Now you could catch it in the earlier years, which is usually driven by low incoming supply and economic improvements. You could grab it in its mid years when it's basically, hey, something's really happening here, which is economic improvement, low incoming supply, and low active and current supply. And then you can start seeing it here, which is all of that plus higher transaction volumes, plus lower vacancy rates and faster selling. So this is when this curve starts to emerge, and also high 1-year recent price growth. The main thing is that's kind of getting to a market early. Then you've got the hot spot, which is really rocketing away. Last 12 months growth plus all those indicators and more is looking solid. And then you've got peak rate of growth. And then you've got the second wind. This is where markets come off a little bit and decline under that curve line, and they come back around for a second wind. These runs don't typically last as long, but they do still prove to be quite strong in their capital growth. Some examples are more of the coastal New South Wales markets. When they had a huge cycle in the last 10 years, they dipped a little bit in 18, 19, 20, and then they picked back up again for a rocketing time in 2021 before calming down again in recent times. So that's me trying to do my best to explain the growth cycle, why it's strong in Brisbane, but it can't remain in this position forever. Eventually, after this little bit of good kick in growth, it should come back down again as these metrics start to change. But what are the rest of the 9 charts? So let's look into chart 2. Migration trends. Yep, back in action again, but more than ever on the internal. Now, these numbers aren't crazy high on the internal, but they're still very solid. And as you can see above recent trends, Brisbane's internal migration is back and overseas migration back too off the back of the COVID lockdowns. Now, when we see Brisbane's population growth, it's higher than Perth's, which came in at second place. And this population growth really across that overseas and net internal migration. Next chart. This is awesome. So unemployment really rocketed down like most parts of the nation. And they have that correlation with the job advertisements rising. So we call that a negative correlation. And so with job advertisements rising, that is very strong levels. So the local economy is strong. No wonder why wages across Australia, when you start to see these numbers in many areas, have moved along really well. Although low in terms of in comparison to inflation, it's still some of the strongest wage growth that we've seen in recent times. Now we expect as RBA rate cuts happen, you can start to see rate rises happen. You'll start to see the cooling off of unemployment and job ads finding their peak, although the job ads are still at super high and strong levels, as you can see in comparison to the years prior. And that was kind of really Brisbane's problem in the past, guys. 2012 all the way to 2018, you saw a weak economy and also a weak housing market. And then after that little bit of a lockdown and everything like that, all the stimulus, all the job creation, all the public-private spending, things start to rock back up. Now, sales market. This is really interesting. I know it looks like, hey, Arjun, what's going on here? Well, why is days on market rising? It was rising a little bit towards the tail end of last year and early this year, but it's definitely flattened and we're seeing this curve come back down again. This data here is likely to show when we look at our back end data, we're able to go in the very micros of like week by week, day by day analysis. We're tracking sales. We're starting to see the days on market come back down again. So actual fact, you should see future updates of this start to see days on market come down, which means faster selling. So expect prices to rise. Now, Brisbane did have a brief decline in early 23, late in 22, but now you've seen huge quarterly growth. In the most recent quarter, Adelaide and Brisbane were one of the top two performers. So Perth was in there at third, but in the recent part of the third quarter of 2023, Adelaide and Brisbane were really crushing it alongside Perth in terms of the capital growth. And that quarterly growth, this is an annualized double-digit gain. So it's definitely boom times again, which is why I also comment on the days on market finding its feet around June, and it's now started to flat and decline. When we look at the demand versus supply, it's clear that changes are happening in the Brisbane market. So firstly, we can see housing inventory, which is the relationship between demand being sales volumes and supply being listings trend down. So when housing inventory trends down, it puts more pressure in a good way on the market. And we can see that as evidenced by sales volumes that were declining in the early parts of the year have now flatlined, and we're expecting these sales volumes to rise a little bit, and listings that increased a little bit have come back off. Now remember, listings are meant to be higher in that springtime and really keep this pop-up going, but they've actually started coming down again, which is creating a little bit more pressure because we're going towards the end time of the year, and less listings but stabilized sales volumes equals declining inventory. The same way you could have similar listings but higher sales volumes also equals declining inventory. So this is clear that we're starting to see how this goes. Now, from the long-term supply trend, Brisbane's definitely undersupplied on the housing construction. So we call that sort of 2 to 3% a balanced supply risk. And then when we start to see 3.5 to 4%, we start to call that a high supply risk. Now, in this particular case, this is new construction, continues to trend down year after year, and we're now seeing lower levels from back in the days. So it's clear that Brisbane's going to move into an undersupply in construction if this curve of building approvals doesn't turn around ASAP. For now, it's not looking likely to turn around ASAP, so we're going to continue to see this undersupply for the years ahead when it comes to new build housing. So growth cycle wise, yes, Brisbane killed it in the recent 3 years, but over sort of 5 to 6 years, Greater Brisbane did in line with its counterparts of the capital cities. If you go to 2019 onwards, though, as you can start to see, Brisbane really kicked some solid goals here in line with the rest of the country. Now, Brisbane's growth cycle after a recent dip and seeing it come back again does have some more legs in it, because during this undersupply, Brisbane still remains fairly affordable. People continue to come in, construction stays low. So I think these are all catalysts for more growth ahead. When we're looking at rental trends, you can see the rents are really booming up. Vacancy rates remain low. So chart 8 showing that means rents are expected to grow as well. And you can just see that in the recent year, double-digit rental price growth. Now, when you look at long-term trends, Brisbane rental market's only been growing about 3 to 5% per annum. So that means that this 14% is huge and a clear rental boom happening and continuing. When we look at rental yields, Brisbane's always been a good place for rental yields. In fact, it's in line with the capital city averages. Brisbane, Adelaide, Perth, Hobart, Darwin, and Canberra are the ones really driving that capital city average to healthy numbers, but I'd expect Brisbane yields to continue rising, which is a great sign for more growth ahead. Renters moving over the buy side, investors being attracted, and then buyers continuing to buy there as well. All of that's a recipe for, more continued growth. When we're looking at long-term trends, you can see here Brisbane is in that sort of 3 to 5% per annum range I gave you prior. It is in terms of that mark coming back up pretty quickly, and you can see that it's catching up to the greater city counterparts. There's still more legs in it for rental growth, but once it starts to get to that sort of 60% level over 10 years, it's starting to be in the long-term averages and above long-term averages, which means that it can't keep growing at that rate. So could be maybe another year or two of good rents before averages catch up, but if it keeps remaining this undersupplied, who knows how long it could go for. So over the next 6 to 12 months, what are we imagining? Well, if we just summarize this, rents continue to rise, yields staying decent, vacancy staying low, growth cycle likely to continue, but not forever. forever because of being a second wind. Low construction pipeline, that means low construction for the years ahead, combined with falling off listings and stabilizing buying, which means net inventories lowering and at pretty decent amounts. Combine that with faster selling because it's starting to flatline and coming down soon as well, and a strong economy, well, and people movement. I think it's clear to say that our overall summary here is that Brisbane's quickly picking up market pressure, and from all the benefits of growth, we do believe that Brisbane will keep growing in the next 6 to 12 months. Now, we're not saying the Olympics are a cause of this, but it's just adding to the boost of the local economy. So is the population growth, so is the undersupply of housing and construction and housing for sale. It's not this one thing, the Olympics, it's just everything put together. And so that's the components of Brisbane's growth. So what does that mean? Well, it means that we expect the next 6 to 12 months to continue to accelerate. And then with Brisbane, we expect the growth cycle to find its feet eventually after a bit of a pop off, what we call the second wind. And it should hopefully calm down. Now, if it doesn't calm down, it's because the rental supply never came back, the construction supply never came back, and vendors never came back to list their houses in huge amounts. There was a bit of pickup in listings in 22. Let's come back down, as you can see from the trends I've showed you. There's more. Did you know the analysis of the Brisbane property market is actually the third city I've examined on this YouTube channel? Now, click here if you'd like to check out the first couple of episodes on the Sydney property market breakdown or even the Melbourne property market breakdown, and make sure you click the like and the subscribe button so you can have more cities show up on your investing radar with the episodes ahead.